results in Q2.
Good morning, everyone.
You want some water?
No, it's fine. As Petter was saying, this is definitely a quarter which we are not satisfied about. Main reason being, as you see in the sportsbook margin, which is lower compared to Q1. This is the reverse situation. The result has obviously been impacted from that. We have lower gross winnings, and as well, the operating expenses has been higher, partly though to one-off cost. That said, we are very confident in the future. We see now in the third quarter, in the beginning of the third quarter, that the sportsbook margin is normalizing and growth is coming back on certain markets. We're still very confident in delivering on the long-term financial goals, which we presented in Q1. Our priority is obviously organic growth. We also look at acquisition opportunities. We have several discussions, but given time, price, and so forth, we are very conscious about making the right type of decision, especially in terms of creating value for our shareholders, and we will be prudent in that area. We have, during this quarter, initiated several productivity improvements, which I will go into later on. Our business with a sportsbook, which is our core, it's the heart of this company, and it's an engine which is having a volatile performance. For this quarter, we have a margin of 4.0%. For the half year, it's more in line with what we actually say and think about the long-term sportsbook margin between 6 to 7%. If you dig into the details behind it, you can definitely see that the volatility is there and there are some outliers. But those are within a standard deviation of 95% confidence. And as you see from this, it's actually converging to a narrow space. Why is that? Well, this is about risk diversification. The more markets you enter, the more offering you have on the sportsbook, the less volatile will that product be. It will never converge to a very, very narrow space, because this is a business which has winnings and losing, which you saw in the Q1 versus the Q2. So this is the nature of the business. There's nothing hidden behind it, and this is what we work with, and we are seeing this, and we believe it will continue being this. And it's very important for anyone, if looking into this industry, that this is the nature of the business we're in. This is obviously have an impact, as said, on the gross winnings. So for Q2, it's 16.5. Half year, you see a quarter-on-quarter, half-year-on-half-year growth versus 2.6. And obviously, Q1 was on the high-end side with a 9.9% margin on the sportsbook versus 4%. And that's obviously, as said, has an impact on the overall gross winnings. As well on the result. Part of this is due to the sportsbook margin. Part of it is changing in the cost structure. And I'll go into details behind what the difference is versus the last quarter and last year. Our customer base is growing. There is a seasonality effect between Q1 and Q2, where you have weather impact and other things, and making the customer not as active as for other quarters. Also, which is very important that when you do the comparables, is that the last comparable last year had an impact from the World Cup. So this second quarter is harder to beat the last quarter, given that specific influence from the World Cup. We see a lot of growth in our registered base of customers. Why is that growing and not the active base? Well, we are focusing a lot on new markets. In new markets, you see poker, for example, growing in Southern Europe. When you see poker growing in the market, there is a registration and a time to being an active. That's very different from being a sportsbook customer, because you start more or less immediately using our product. But there is a time lag for poker. So registration base will translate into a higher active base going forward. The split on the product, we decided from now on to actually split out the live betting. The reason for this is that live betting is increasingly an important product, and it's a very distinct product, and we think it's a competitive advantage and creates a lot of barriers to entries, because you need to have a structural capital, a number of people, the right people who understand the specifics of a game or an offering. There's also a difference when you look at the live betting versus the general sportsbook. The live betting is less volatile, have a higher turnover on long term, but it's going to be a lower margin. It's more like a slot machine versus the sportsbook. So we see live betting to be increasing for a foreseeable future, and it's going to be a very important product for us to differentiate versus our competitors. That will also have an impact when you take a look on the total margin, obviously, given that this is a lower margin business than the sportsbook in general. Geographically, still Sweden and rest of Nordic is a very important market. As we said, and we still believe, and we're working on, is that we will change that mix with a greater focus on other markets like Southern Europe and Eastern Europe. So by 2010, this would be a different scenario and different split of our geographic split. Numbers for Q2 and first half year. As said, 16.5, EBITDA of 3.1, and an EBIT of 2 million British pound. Compared to last year, that is lower, and we are definitely, as Petter and I'm restating, not satisfied by this. We know why it is like this. We see what the reasons behind it is, and we definitely are working on those parts which we can influence. If you break that down, what the value add is, the turnover has been quite significant for this quarter versus last quarter. So there's a growth there. It's also growth on quarter by quarter. The gross winnings, and then you see the split down to the EBIT level, where the operating expenses is a part which has increased, and it's partly due to one-off, and it's also part of a strategy of mixing things between marketing and salaries, and I'll tell you why that is. Firstly, the drivers behind this on the revenue side is that the quarterly turnover has been high. We've seen a lot of favorites, winnings, especially in May and June. And if that occurs at the same time for all big offerings like ice hockey, like football, like tennis, that has an impact on our results, and our customers is probably very happy during that quarter and that period, given that that's actually what's happening on their behalf. Live betting is increasing. Of the sportsbook, it stands for 9% versus 2% for last half year. On the cost side, we have increased resources on marketing and live betting. This is partly the reason why you see salaries being higher than maybe being expected. This is a very important area for us, because we don't want to do marketing which is all discretionary and shooting with a shotgun method. We want to be very target, creating value. When we spend something, we get something back. On the online marketing area, that is a new thing for this industry, and it's going to be very important for us to actually capture that opportunity going forward. And that is something we've been starting to work during this quarter and will see the effects from during the second half.